All right, stocks finished the day on a really good note. One of your bigger gains, but a lot of very interesting patterns. For example, the VIX was up today. The S&P was up 1%. The VIX was up. Not something you see very often. There was a lot of very interesting patterns developing here lately. From we've talked about recently correlations, negative correlations with like IWM and the S&P 500. There's another very interesting negative correlation that's cropping up too that's not typical that I share with you here today as well. But some interest, like the market appears to be kind of on the verge of some kind of move, whether it's a strong move to the upside, whether it's a volatile move, an increase in volatility move to the downside, which of course I lean to the latter, considering what I'll show you today, the types of patterns that we're seeing, the types of signals that suggest that something is coming. Very irregular, very rare pattern. Even when you're just looking at like retail exposure or institutional buying, I'll show you some of that as well. So some very interesting patterns I break down for you. What do they mean? When have we seen them before? A lot of them pointing back to the end of 2021, some pointing back to the end of 2007. Of course, the difference between now and 2021 is we're not about to start raising rates. We're actually about to start cutting rates. And then traditionally, falling rates has not been. If you follow me on Twitter, I shared a tweet earlier today where interest rates falling has not been a good thing. It usually coincides with stocks falling when rates are falling, unless the yield curve's not inverted. But the problem is the yield curve's not only inverted, it's still very strongly inverted. So that traditionally hasn't led, when it's been inverted and yields start to fall, rates start to fall because the Fed's cutting, that has not been. So it's okay when the Fed was raising rates in 2022. We get a little bit of a correction, but then a strong market. Not so okay when the Fed thinks it starts cutting. So we're going to break all that down. Our trade idea is a stock that I shared with you. That this idea of something that's not moving with the market that typically does, and we'll talk about how to trade that. So let's go ahead and get started. Today is Wednesday, July 10th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video. I take a look at old trades, manage them, see if we should stay in them or get out. We also put on today's trade idea already before the market closed. Come down to the bottom, click this heart. It opens up this tab. You'll see here in a second. Eventually there'll be a like button there, just like it is normally on the tweet. Same thing here. I don't know why the internet's not working for me, but this thumbs up icon takes you to our Facebook post. And you can hit that like button there as well. Again, the more you do that, it helps get our content out to all of our followers on those platforms. So thank you to those who do that day in and day out. Those who don't, you can do it right now while you're watching with one or two really easy clicks. Help us get to our goal of 100 likes on our Market Outlook tweet. All right, let's take a look at the S&P 500 with the market forecast indicator. You can see a really good move today. In fact, we are higher. This is the highest point above the 30-day moving average that we've been this entire bullish cycle. So good strong move higher. Intermediate line, of course, still in the upper reversal zone. Extremely high, 98th percentile. Market sentiment's up to the 86th percentile now, so it's really moving higher. The near-term line, of course, staying there. The momentum line, as we talked about yesterday, coming back out of bearish territory, out of the lower reversal zone. So good jump higher, of course. That's 1% move on the S&P, over 1% move on the NASDAQ 100. So you have a very similar pattern there. You're up 7 days in a row on both those indexes. The Dow Jones finally kind of joined the party today. Biggest move that it's had, closing above a bunch of highs. Big strong move on the momentum line. So that suggests a good possibility the near-term line makes it there, right? This is 1 day out of bearish territory. 2 days it's got to get to the 80th above the 80th percentile to avoid the higher probability of another bearish peak. So the momentum line getting there suggests a good possibility that the near trend line gets there too. Now, the only time we ever had a momentum line spike on the last intermediate run was right at the end. Right, we were doing okay, and then we had that spike there. Kind of the same thing over here. You had some spikes at the end. Well, this is the biggest spike out of all of them, and the question is whether or not this ends up being the end. We don't know, but you can kind of see how that could be the case based off of past precedent there. And then finally, looking at your Russell 2000, you can see its momentum line also got into the reversal zone above the 80th percentile. So again, suggesting that the near trend line could get there, though the near trend line now has spent 3 days from getting from below 40. Again, that implies a higher probability that we end up with a bearish peak. You did get a bear tag here. Now we are almost with 0.75% above the moving average. That bear tag can be a reversal sign, but usually it's just barely above. So we'll see. 0.7% might be enough to where there's a good chance that it's a bear tag that starts a bullish rally instead of bounces down and continues the bearish move that we've been on. Let's take a look at the weekly chart. Obviously a very strong weekly candle there. We're in the 97th percentile almost of how big the gap is between the 10 and 40 week moving average. Very, very good sign. 3 green arrows on the S&P and the NASDAQ. The Dow is back to 3 green arrows. The Russell is back to 3 green arrows. So 3 green arrows across the board. The moving average now is green on the Dow, so that's a new change. We're not quite there on the green line yet on IWM, but we'll see. We're close to that being the case. You are easily above moving averages on the S&P here. Your Dow Jones Industrial Average obviously broke above its moving averages. The 8 and 17 day are rising above the 30. You're above the point of control. You're moving back up towards old high. You had a really good jump in volume today on the diamonds on this run, more than 1.5 times the average volume. Usually you don't get 1.5 times the average volume on up days, right? You usually get them on the down days. And then finally IWM, you can see, did not have a big jump in volume and didn't really, at least it did get above the point of control, not by a lot, but it got above the point of control. Your MACD did turn positive, and your stochastics did get into bullish territory. Barely on both of those, about as barely as you can get, and you're barely above the moving averages, and you're barely above the point of control, but at least you're above it, right? At least it's a good sign that you're at least above those levels, even if it's barely, rather than still in bearish territory. Looking at the DMI, you can see it's still a positive. I mean, your ADX now has crossed above 40. Your negative indicators dropped down below 8. Right, the lowest it got to over here was 7, and it looks like we're headed that direction, barring a significant drop in the next day or two. So again, another parabolic move, the third move for this parabolic for this run above 40 on the ADX in the past, just a little bit more than a year. You can see, like, you can go years without, like, you didn't have one at all in 2021. You didn't have one at all in 2022. You had one in 2020. You had one kind of right at the very beginning of 2020 where you barely got above 40, mostly the end of 2019. Then you had one that was obviously in 2020. You had one in the very beginning of 2018. So you can see it's not a common thing. Before 2018, you had one here in early 2017. So you're looking at maybe one a year. We didn't have any in 2015. We didn't have any in 2016. We didn't have any in 2014 or 2013. None of those. We didn't have a single move where the ADX got above 40, the black line got above 40. You didn't have any in 2011, 2012, 2010, 2009. None of these. You finally had one way back here in 2004, ironically when the Fed started to raise rates. And here we are now with 3 in the past year. And 3, pretty much the last 3 intermediate moves have all been parabolic. So a very interesting pattern here in terms of bullishness. Of course, I mean, we're well above 80 now, easily above 80 on the RSI. You're still above 150 on the CCI. The weekly CCI is actually still almost above 150. So and above 70 or up to 78 on the weekly CCI. You can see the other times we got really parabolic. It was before COVID, and then here recently, earlier this year, we had a really strong CCI. In late 2021, we had multiple runs, not as strong, but at least above 70 there on the weekly CCI. And of course, on the monthly version, you can see we're above 70 again. The last time we were above 70 was right there before, again, at the end of 2021, and also in 2018, and going into the 15-16 correction, and obviously going into the 07-08 bear market. Let's take a look at the Ichimoku cloud. You can see very strong trend going there. If we look at the diamond, we have a weak bullish trend on the diamond finally. IWM, still no trend, right? We're still in the clouds. We still haven't got that breakout that we've been looking for on IWM. SPY, we did break above the upper band, and we're way above the upper Keltner channel on SPY. The diamonds got almost above the upper band, and still not outside the upper Keltner channel yet. You can see the positive momentum down there. IWM still has, I mean, we are in the upper quartile, but still has extremely low bandwidth, way inside the Keltner channels. Slight positive momentum, so slight positive signs for the Russell 2000, but not quite there yet. SPY, you can see the new higher high. It's made the 4-week range bigger, because remember the low point's going to move up here after another day. It's going to move up really sharply to this level, and then after a few more days we'll move up into last week's low point. And of course the high point will just, any new high we get continues to expand. So, it is back above 5%, but it's going to drop here pretty soon in another couple of days. Again, unless we get significant new highs. Of course, IWM, you can see, I told you yesterday, both lines crossed below 30. Well, now they're almost below 20. And we're not going to get a new high or a new low tomorrow, most likely. We're still in last week's range. We're still mostly in the week before's range, so we're most likely not going to get one. So you're going to end up hitting zero on both of these. Now the high is going to jump up pretty sharply because that's going to be the new high after a couple of days, unless we get a new one higher than that, higher than 204. This is going to be the high. So it's either going to jump to 100 or it's going to jump to right around this area if we don't get a new high point above that level. But the fact that we're both below 20, and well, tomorrow we'll definitely both be below. One of them, the green line, will be at 0 tomorrow, because it goes from 5, I believe it goes from 5. Yeah, it goes from 5 to 0. So the next day is 0. That means the high point is going to be on that last day right there. And then this will be, just a few days off of that, right? Will be from 21, you go down to 15. So that's how low. You'll have both of them at 15 or lower, which is just insane. It's very, very rare. Again, it goes to show just kind of what kind of sideways patterns developing there. Today's volume and range was actually pretty decent. We had been very low volume, very low range, but today we crept up to 38 million. We had a 4.9 point range today. That's bigger than average, so that's really jumped up. The average here is still extremely low. Anything below 0.8 is extreme, and we're way below 0.8, and the volume is still extremely low. So we need more days to get that up. But the problem is, generally, when this goes up, it's not because we're rallying. So keep that in mind there. And then finally, let's take a look at the VIX. The VIX, we had a 1% up day today on the S&P 500. We had almost a 3% gain. We did have a 3% gain till right at the very end on the VIX, which is, again, not something that's common. And the VVIX really jumped up today. You can see it jumped up to 83.41. In fact, if you look at this here to see the size of the move, this is one of your bigger moves on the VVIX that we've seen for a while. Right, again, you usually don't see this on a day. Like, for example, on these 2 days, June 14th and June 20th, right, June 14th and June 20th, if you look at SPX on those days, June 14th is right here. So we were down 0.04%, so nothing too major, but we weren't up. And then here we were down 0.25%. So those are the other 2 days that the VVIX rallied big time. Today, the market was actually up 1%. So it's kind of interesting to see, you had this big move higher, even though the VIX is still low, it's still compressed. I showed that on a tweet. The VIX is very compressed. When you look at its relative ATR, it's down to its extreme lows here. And not only that, but the correlation of the VIX with the S&P 500 is positive. It's positive 52%. Again, it's rarely ever this positive. The last time it has been this positive was the end of 2021. A lot of analogs, a lot of very similar patterns to what we're seeing now, to what we saw at the end of 2021, and you also see it too here in COVID. It got up to this level right before the S&P started its intermediate pullback. So, it's generally not a good sign. I mean, generally it means that the VIX is about to jump here when you get this correlation. And you can see the seasonality is looking for the VIX to be bullish anyway. So we're going into a very seasonally bullish time of year for the VIX with a rare, strongly positive correlation of the VIX with the S&P and a very compressed VIX. We are set up for, and the Russell 2000, which is set up for the mother of all squeeze plays, we are set up for a move. One way or the other, we are set up for a move here. Now let's take a look at what's driving this price action. I wanted to bring this up too, kind of another sign that something is afoot, right? There's a move coming here. There's multiple signs, right? But here's one in particular. This is the Gamma Exposure Index from SqueezeMetrics.com. Measures again how much call buying there is going on right now, and then the dark pull buying is the blue line, which is kind of behind the scenes. So usually those two are kind of opposite from each other. When one goes up, the other usually is much lower. Like for example here, you can see the gamma exposure is high, but the dark pull buying is low, and when the dark pull buying is high, the gamma exposure is low, and so they usually are opposite. You can kind of call this institutional buying, so to speak, and this is obviously retail buying, the orange line. Well, they both reached multi-month highs, right? So here's the gamma exposure. You can see it got up to multi-month highs, one of its bigger moves. The dark pull buying, which on that kind of a move, you'd expect dark pull buying to be really small. Dark pull buying was also multi-month highs, goes all the way back to this peak right here, back in January. So you got January, about a 6-month peak in the dark pull buying, and you have here to December about a 7-month peak in gamma exposure. So, and when you look at the skew also jumped today. So there's your new highs and new lows, positive, above the moving average, above zero. They're at 148. But if you look at the skew, which measures again the demand for deep out of the money puts, back above 150 again this week, back above 150. This case above 151, and the 20-day average there at 148. So there's something kind of going on here. Now, of course, you have inflation data, and you have your FOMC later this month. But inflation data, tomorrow and Friday could be something. But the market is setting itself up for some kind of move, some kind of squeeze play, some kind of move there. If you look at what's driving the price action here today, it's very similar to what we've seen across some of these other days here recently. If you look at the July 10th chart here, we'll go to like a 5-minute chart. Give it a minute to come up. You can see it was all U.S., right? The U.S. stocks, emerging markets still continuing to outperform. But there's your developed markets up 1.4%. The Qs, IWM, SPY all up 1%. Everything up about the same 1% there. Commodity, the dollar was slightly lower. Commodities were slightly higher. Bonds were higher, which means yields continue to be lower. If you look at this chart here, you can see yields continuing the recent trend to the downside, back to 4.28%, that intermediate line coming back down there. You look at the the dollar index. This is something that's also, you can see some of these really strong returns over 3 months for Apple, 38%, 55% Nvidia, 32% for Broadcom, 53% for Tesla, 22% for Google, 22% for Qualcomm. They're all very, very strong returns. And Netflix is about to get to the 20s. And once we get, to the basis down here, and only a week away from that happening. Same thing with AMD. You're going to have big numbers here once the basis gets over here. Same thing with Amazon. The basis is going to get really low once you move up. So you can kind of see things are going to change even for those single-digit returns. But if you take a look here at the dollar index here, let's go to the dollar index here. You can see it was back down again. Again, not breaking down, not breaking the 200-day, and then but your stochastics, your MACD are bearish. The question is whether it will keep, how much further it will keep going down there, because there is that 200-day moving average that's kind of limiting. That's acting as a support level. So I mean, and if you look at like crude oil, which is another big factor for inflation expectations, a big factor for the 10-year yield, it was actually up here today, even though commodities were not up that much. Well, up a little bit. Crude oil was up, and as you can see already in the after hours here, it's up on this particular session. There we go. You can see it's holding its 200-day moving average as well. Looking at the sector rotation, we'll look at just today alone. You can see here again, it's XLK. Materials did pretty well today, but it's still XLK, right? XLK is still the big winner. Everything else is actually lagging the S&P 500. So you only have 2 sectors that are outpacing the S&P 500 today, right? So you go back to the rest of this week, and you see, okay, you have, XLY is kind of matching. XLK is beating, XLU is beating, XLV is, so you have 2 safe haven sectors outpacing the markets, and XLK, and that's it. Those are the only ones that are outpacing the markets, and you can see the relative strength. XLC is losing momentum. XLY is still okay, but you can see XLK, like everything else, is dropping down hard, and XLU, is moving back up to being, along with XLY, some of the only ones. So it's still, a very narrow market. You did get some better breadth today with the McClellan oscillator getting back to positive levels, but still not breaking that 35 level, which is kind of what you'd like to see if we're actually going to start trending, trending move up to the upside, like you can see there. So we still haven't gotten that yet. And like I showed you, the new highs and new lows, and the number of stocks above the 50-day moving average made a pretty decent run today, but again, and when it has done that in the past, when it's had the big runs, they don't last very long. You can see they jump, they come right back down, and we'll see if that ends up being the case this particular go around. You can see the 5-day rate of change, but I switched this to a 1-day rate of change, and you can see, if I zoom into the 1-year chart here, you can see it's a relatively bigger move, but every other one of these bigger moves have all come right back down. So it remains to be seen. Getting above 300 is kind of what it needs to do, and then it needs to stay there if we're going to maintain, again, a bullish trend going forward, as we've seen. And when you saw back over here, you got above 300, you were bullish the whole time. You're above 300. That's what you'd like to see. I saw that over here as well. We haven't quite seen that yet. As parabolic as we've been, we haven't had the breadth this entire time, and today looks better. Not as big as some of these other spikes, but at least it looks better. Now we need to sustain that and not just have it be a very temporary move like the last few times have been. All right, our trade idea of the day is on MasterCard. Let's take a look at MasterCard here, which is interesting because, again, this is kind of a reflection of spending, right? Consumer spending is typically very correlated with the S&P 500. When you look at the correlation chart here, let me move out here and look at MasterCard on a 10-week correlation from MasterCard. Let's go all the way out to like 20 years. Weekly chart. we are pretty negatively correlated. In fact, it's only the third time that we've been more than 60% correlated to the downside, to end of 2021, end of 2007. So it's not common. It's a lot more common for MasterCard to be very positively correlated with the S&P. Makes sense, right? People spend their money with their credit cards. That's not the case right now. Very negatively correlated. And continuing to break down, you can see as the market goes up 1% today, MasterCard was not up 1% today. In fact, it was down 2.5%. Kind of breaking down below these lows, below these cluster lows from back over here on the earnings announcement, on this last earnings announcement. The near-term line dropping yesterday below intermediate line now rolling back down the bearish territory. Market sentiment still above market sentiment, but market sentiment's pretty darn low itself. Looking at the weekly chart, you can see a bearish candle and flirting with breaking below the 40-week exponential moving average. You have 3 red arrows, obviously, as you're below the 200-day moving average as well, with a bearish MACD and stochastics. Pretty decent volume on that down day as well. Looking at the DMI, you can see a big breakout pattern there on the DMI. You also see a breakout pattern as well on the RSI, right? RSI and the CCI are both breaking down to bearish levels, strong bearish trending levels. Looking at the Ichimoku cloud, you are below the cloud, negative rate of change now. Whatever small bullish trend you had is gone. And then you look at the Bollinger Bands and the Keltner channels, and you can see we broke below the lower band and the lower Keltner channel with some increasingly bearish momentum. The bands are still inside the Keltner channel, so we may again just be starting a series of green dots here. And so I decided on this one to come over to the long vertical side of things and do a long put vertical spread, selling the low 20s delta, buying the 420. That gives me a position sizing for $500, gives me about a 3-to-1 reward to risk ratio here, and you can see that's how much flexibility I have from timing. It doesn't have to go down immediately, so it can go up, it can kind of meander for a while, and that's how much I have to work with for flexibility on a timing standpoint. Alright, well that is it for today. You've heard from me now, and I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, join us at marketscholars.com for free, follow and like us on Twitter and Facebook as well. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.